Today is Monday, November 12th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, let's start with the grains this morning, specifically the USDA crop report. What did that report say last week, and what was the market reaction?
Well, first of all, they increased the world soybean and wheat stocks numbers because of higher China numbers. They doubled the world corn stocks because they went back to 2007 and adjusted all of the China crop production and stocks numbers higher due to a report that the Chinese put out, Statistics Bureau put out. They lowered the U.S. corn and soybean crop numbers, so that should have been friendly. And they lowered U.S. soybean exports because of the trade issues. The corn market started out at 374 in the December, dropped to 371, and then now it's kind of come back a little bit. The beans dropped all the way to 864, come back to 882, just hoping that there's going to be a deal soon. And the wheat went from 517 to 503, now we're back to 514, and hoping that some dry weather in Russia is going to help the wheat market.
Steve, when we talk about Chinese reports, what do U.S. analysts think about the accuracy of reports coming out of China?
Well, inside China, people that talked to some of the crushers, most of them believe that these numbers now are more realistic than what they were before. I don't think anybody knows, especially the Chinese, what the actual numbers are, and since these numbers were put out, they've sold some corn in their stocks. The last time I was in China, the USDA, two representatives came up to me and asked me what our numbers were, and I said I couldn't give it to them because, I didn't know what they were. But at the same time, they're not given any money to go out and travel inside China to look and see what some of the production and stocks numbers are. So I would guess the Chinese are just relying on, the U.S. is just relying on China data, which some people think is still a guess because the country is so big.
So further, China, when will the U.S. and China meet next to talk about trade?
The President of the United States and President of China will meet for a G20 meeting on November 30th in Argentina. Expectations is that last week both the President, Secretary of Agriculture, Secretary of Treasurer, and the U.S. Trade Rep met and tried to come up with a framework to talk at that meeting. Most people still don't think we're going to get a deal until the first quarter of 2019.
Let's talk a little bit about the cash market. U.S. corn, soybean, wheat basis levels firming. Why is this, and should farmers be looking to sell in this area?
I think that the farmers are done selling cash right now. Harvest is approaching completion, and I think the farmers have sold less than what people had thought at this point, given the fact that we still have record yields and big crops. So farmers are trying to find as much storage as they can. I think that if you have soybean prices that make profitable, if you had high yield, you should sell the cash. If not, you could probably wait for some kind of bounce, especially in corn and wheat, from a post-harvest rally. The soybeans is up entirely 100% whether we have a trade deal or not.
Finally, Steve, can you shed a little light on the current technicals in corn, beans, and wheat? I mean, where are the important numbers?
Beans are in this continued broad trading range between $8.40 and $9, and I don't expect us to break out of that unless we get some news on a trade deal. Corn, nearby corn has been a real tight range, 360 to 380. I expect us to stay in that. Technically, the market would like to trade over 380, but we'll probably run into some farmers selling above that price level. And in the wheat, the chart looks friendly. We broke out above some moving averages today. So we'll see if the funds want to cover their shorts because of this positive trade action today.
Let's turn to the financials. Alan, the FOMC left rates unchanged last week as expected. What is the outlook for Fed policy the rest of the year and into 2019?
Well, first of all, it appears that the probability of a rate increase at the December meeting, that's December 19th, is dropping a little bit now. Last week it was anywhere between the 80 to 82% range. Now it's down to 76%. So to me, it's clear that the global economy is slowing to some degree, and that is being reflected in chances of rate increases from the Fed going into next year. even though the financial futures markets currently are predicting a 60% probability of 3 rate hikes in 2019, my work suggests that there will probably be no more than just 2 rate increases next year.
If you talk about the global economic slowdown, some of the industrial commodities, including crude oil, have been under pressure recently, specifically due to that. What is the outlook for crude oil prices now?
Well, today we are seeing some higher prices with reports that the Saudis could be cutting some production. But generally, the industrial commodities have been very weak. In fact, the crude oil now has dropped to its lowest level since March of this year. And it's also the copper market, other industrial commodities under pressure. So my outlook is continued weakness for the industrial commodities. Of course, that would include the crude oil, the copper, others. There's just likely to be more pressure in light of what's going on globally, the trade situation. More weakness, I think, is in store for those.
How much of the global slowdown is specifically based on the trade negotiations that are currently going on?
I would have to say it's a very large portion of why industrial commodities have weakened. I also think that the Fed has been maybe a little bit too aggressive in raising interest rates. And also it appears that the Fed is not backing off with their hawkish rhetoric. So you're absolutely right. A good part of the reason for what we're seeing in the financial markets and in the industrial commodities is what's going on in the global trade situation.
Finally, Alan, let's talk a little bit about the midterm elections. They're now behind us. What are the historical tendencies for stock index futures after midterm elections?
So there's a very strong tendency for stock index futures to advance in the year of the midterms. So that would be between now and the end of the year. Also, the third year of a presidential term is historically the strongest. So that would be, of course, going into 2019. So my outlook is for higher prices, even though today we are seeing some pressure in all of the indices. Also, I would not be surprised to see some new historical highs in the first half of next year in some of the stock index futures.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.